Today's Wednesday, the 11th of November. Happy Veterans Day to you, those who have served. The S&P 500 is still below the volume weighted average price from the gap earlier this week, but is holding above that 5-day moving average, basically pinching between the week to date and the month to date volume weighted average price. The daily time frame, we've got to be impressed that it holds up above this breakout level, and we're not seeing a deeper pullback. So I think we just still look at this market as kind of a yellow light. The NASDAQ, big bounce back, still below the 5-day moving average, but the pattern of lower highs and lower lows was broken. So kind of back to a little bit less cautious and more neutral in the intermediate term time frame. Longer term time frame still in an uptrend. And so far it looks like we've held a key level, which is the conjunction of these two volume weighted average price levels from September high and low, as well as the 50-day moving average. Now, the 50-day moving average will decline for about 3 more days, so it might need to just settle down a little bit before we can really trust a break higher, but got to be impressed with the comeback today. The Russell 2000 still holding on to the bulk of the gains from that gap and this large run that it's had recently to new all-time highs. We're not closing at those new all-time highs, but still very impressive strength here. When we look at the week-to-date volume-weighted average price, let's actually look on the 15-minute time frame. You can see it's holding up very strong. It's correcting more through time than a price pullback, and that's generally more bullish because it shows there aren't a lot of aggressive sellers. Instead, there's bidders in there waiting to swallow up bids. The shares of the semiconductors also recovered strongly here, right up to the week-to-date volume-weighted average price. And this group, I think, again, it kind of goes back to cautious, not on the intermediate term. And biotechs, they look ready to go. As I said, I think if they do something, I mean, that I drew that in yesterday, and that is pretty much how it looks like it's going to happen. So go back and review that again. This is how you anticipate a move. It's not about hindsight. It's about anticipating and then waiting for price confirmation before you participate. So as I mentioned on Thursday, if it can get back above 140.09, then I think the buyers are back in control. And then it's up to you to decide where you put your stop. Do you put it under here? Do you put it under here? It's not about what I would personally do. It's about what would you do. I have more experience, sure, but I might set my stop a little bit too tight, just under 138, and get bounced out, but I would get back in. If you're not able to get back in, maybe you need to trade smaller share size and trade with a stop underneath here. No one should trade anything the same. We look at the market and we try to make it our own. The financials down 11 cents, also holding onto the bulk of their gains. Nothing that I can see to do in there.